Let me dial back to a point that we were discussing earlier, and I think the two are related. The question of supply and demand in the market. If there's enough stock available in the Indian listed markets for all these investors to kind of pile on. Now, what we've also seen are a lot of exits by MNCs, by early stage venture capital funds, private equity investors, who are basically cashing in on good investments made earlier. Now, as they go out, I don't know whether these tax amendments have anything to do with, the timing has anything to do with the fact that there's a lot of the block deal activity in the market. Your sense on that. And then your sense on these sales themselves. Typically, when influential investors sell, it's seen as a red flag. So should we be worried at all?
So the first question, Surabhi, I don't think that there is any connect between block deals and activity in the market and the change in legislation or this new preamble being signed. I think preamble is only introducing a very well accepted and very well settled position under bilateral arrangements as pronounced by OECD way back.
Right.
So I would say that it has no connect with anything that's happening in the market at this point of time, purely coincidental. On your second question of how do I read into large financial investors or private equity investors or sometimes even promoters wanting to sell.
Exactly. MNC promoters, when BAT choosing to exit a part of its stake in ITC, and so many other such deals have happened.
Let's go back to the fact first as to why people get their companies listed. One of the reasons you get your company listed is because you want liquidity. You want ability to bring in new investors and you want ability for existing investors to be able to go out. We all know that private equity has a limited life in terms of investment. I always say that when private equity makes an investment, they first write on their forehead, for sale at my price. and by that definition, everybody knows that they are looking for an exit at some point of time. I would argue that a mature market creates an environment for private equity to be able to recycle their capital because their ability to be able to exit is really the basis for them to make larger investments.
Right.
I think Indian market today offering these private equity funds an opportunity to exit augurs extremely well for access to larger pools of capital for Indian entrepreneurs going forward. So I would say if the market is today offering that liquidity opportunity, great from an Indian market perspective, great for private equity investors and great for future of private equity investments in this country. As far as promoters are concerned, listen, some of them do it because they need to create more liquidity in the market. Everybody wants to see if there is larger pool of capital available, and we spoke about it a little earlier, that there are many more retail investors wanting to participate in a particular stock. I think it is incumbent upon the promoter to provide that liquidity so that there is greater activity in the stock of the company. So I think it's a very healthy situation. I wouldn't worry about it or read anything beyond the fact that this is Indian market getting to a new level of maturity.
Thank you for watching CNBC TV 18 and do follow us on all our social media platforms for news, updates and more.